The world is at war. Markets should be in free fall. And yet, seven black swan events. Any one of them should have obliterated this market. 7 times investors braced for the crash that never came. Tom Lee has been watching markets for decades, and he says he has never, not once, seen resilience like this. Not in a bull market, not even close, because to Tom Lee, this isn't a warning sign. This is the most bullish signal the market has ever sent. Here's what he told investors.
I think if I was an investor, when I look at the environment, it's very uncertain because nobody wants war and nobody wants problems in the Middle East that could really spiral. But as much as that's our gut reaction, I think when you look at what markets are doing, they've been very resilient. This is arguably the 7th black swan we've thrown at the market since 2020. From COVID to the basically shutting down the entire economy to the fastest inflation cycle in history. I mean, it goes on, and the S&P has been resilient every time. So I do think investors should take their cue from the markets and realize, I think the S&P actually wants the PE multiple to expand. And strangely, I might even add, I think oil prices being high is actually good for U.S. stocks. I did check Kalshi and Polymarket, and betting markets or prediction markets are expecting oil to be 100 even through June and past June. So I think we probably should assume oil, and it's a prolonged period of high oil. But now this is not saying it's always true, but I do think high oil has 3 reasons it's good for equities in the U.S. One is the U.S. is an exporter. So we are actually, as an economy, a net beneficiary of higher oil prices. The second is it's a relative issue, but the U.S. as an exporter, but China and Asia and maybe whoever we compete with economically is a net importer, we start to look better or stronger on a relative basis. So it's a flows back into U.S. equities. The third is that if global growth stalls because of high oil, which I think it is likely, investors want to own growth stocks. And actually, the U.S. stock market is basically 80% a growth index. So it makes Mag 7 and the cryptos and the software stocks look better. And that's what started to outperform over the weekend and actually Monday. And the last reason, and it kind of, I think, important, is that the Trump put only applies to U.S. equities. So I think high oil helps equities, or if you're getting bearish because of it, you shouldn't get too bearish on high oil. There are, I think, 2 things that we usually advise our clients, two of many things. But one is this sort of idea of the rule of 10 best days, that if you don't, and I've heard Josh Brown call it time and market, but if you take out the 10 best days, the 10 percentage one-day gain days in each of the last 10 years, the S&P's average return drops from 16% to basically negative. It's almost 2,000 basis points of your return every year, or 20% comes from just 10 days. So if you feel like you're going to time the market because you're worried about geopolitical risks, unless you've got perfect foresight, you're going to miss the bottom, and that's what happened last year. And the second thing that we always advise our clients is this idea of what they call in Asia kiki, which means crisis is actually 2 words concatenated. It's danger and opportunity. I think investors are too quick to point out danger. I saw that over the weekend, like all these doom tweets, and people were getting oil prices through derivatives over the weekend, like on Hyperliquid, it was oil hit 118, and everybody thought the economy would unravel. You have to think of opportunity whenever there's danger. So if you see high oil, you should also think, how can I benefit? And it's not just buying oil stocks, but it turned out to be buying the Mag 7.
Well, JP Morgan says stocks are still vulnerable from here and could still go down 10% from current levels because of the war. Do you disagree with that?
I think stocks can go down. I mean, this year, our base case is that there will be a 20% decline at some point. But the way we tend to view markets is markets will probably peak on good news, and they bottom on bad news. So war is almost universally just a cadence of bad news. I don't think that's what causes stocks to go down. In fact, our team looked at the last 8 major war conflicts, and stocks almost always bottom at the beginning of the conflict. So, I mean, remember World War II? I mean, sorry. If you study World War II, none of us were trading World War II. That was a long war, and it was actually a bull market. I mean, wars tend to be good for the economy.
Well, here is something most people completely misread about Tom Lee. He has openly warned that 2026 could feel like a bear market, a painful first half, stocks and crypto under pressure, before everything comes back in force. And the moment he said that, the internet ran with it. Bear market, sell everything, panic. But here is what they missed. Tom Lee believes the bull market that started in 2022 is still in its earliest stages. The correction he warned about? He called it a buying opportunity, not an exit signal. And then there is Bitcoin. Tom Lee's data shows Bitcoin has outperformed inflation 97% of the time since 2010, through every bear market, every crash, every moment of doubt. While gold gets the headlines, Lee argues Bitcoin has quietly been the superior inflation hedge all along. Too many people turned bearish looking at short-term pain and missed the entire long-term picture. Here is exactly what Tom Lee's data is actually telling us.
In some ways, there's already been a bear market because software has had a drawdown, and the withdrawal of liquidity, the amount of selling, and then the short positioning is what you usually see at the height of a bear market. And we know the Mag 7 actually has become untouchable for many people. And we know everything correlated to software like crypto has declined. So I think basically half the stock market has been in a bear market already. But the reason I don't think this is the bear market is too many people have turned bearish. I think markets, like if you think about late 2021, and we missed that decline, that was a time when people were quite optimistic and the market was falling in the face of pretty good news until it turned really bad. And I think that that's more likely happening later this year because, we do have things that can cause investors to flip from being optimistic to scared, whether it's a new Fed. We still have a lot of AI spending. There could be new doubts emerging. So I'm kind of in the camp that we're going to be resilient through this war headlines and make our way to 7,300. I think Bitcoin, Bitcoin is 15, 16 years in existence. And over any rolling period, Bitcoin has outperformed every asset class. As much as gold's done great, you've never lost money owning Bitcoin, holding it for 3 years. But here's another interesting stat. If you look at Bitcoin's relative performance to to inflation since 2009, it's outperformed inflation 97% of the time. So it's actually stored your value better than inflation. Gold in that exact same period of time only beat inflation 52% of the time. So in other words, Bitcoin has hedged you better on inflation than gold, even though gold the last couple of years has done great. Is Bitcoin more important today than before? One, people are worried because of quantum, and I think it's a true problem for Bitcoin, but it's not a problem for blockchain. Blockchain has proven itself to be actually a better solution. And that's why we're seeing 2 really important trends really build on the blockchain. The first is Wall Street is tokenizing things. I mean, it's not just Robinhood, like cutting edge companies, it's BlackRock and the JP Morgans. They're building digital coins, tokenizing funds, and actually arguably rebuilding business on ledgers. I mean, look at ICE. I mean, ICE just made an investment into OKX, a crypto exchange. I mean, that's a huge deal. And the second is AI, because AI agents, you know, and if people are building Claudebot, if you send that into the world to collect payments, the most secure way to do finality on payments at the lowest cost with fractions of a penny, you can't do it with PayPal or banking systems. You know, they only go 2 digits. But you might want to collect a micropayment of 1/1,000,000th of a penny, but you do it 1,000,000 times. Stable coins have like Tether and USDC, which is circles, they have 16 zeros. They can collect micropayments even for tax authorities. So, and then private keys, agent systems can easily deal with crypto wallets. So I think AI is going to be building, especially as it starts to do commerce, a lot on the blockchain. And so I would be overweight any of the blockchain stories out there today.